Oh, what's good, everybody? Happy Monday. Welcome back to the markets. We're ready to get started here today. The government's officially open and the markets are all excited. The markets did not respond to the potential of a shutdown. They responded to, yay, we're back open again. So really, all news is good news. That's kind of the phrase that's going around the markets at the moment. I want to get to what Goldman Sachs said to their highest net worth clients in just a minute. But basically, let's take a look here. We've got the Dow up 143. Basically, all of that came in the, well, half of that came pretty much throughout the day. The last little push there came at the end of the day. The Dow finished up 143. The S&P added 22 on the day, and the Nasdaq 100 was higher by 71. So really, if you're a retirement investor, if you're one of our clients, or if you have checked us out, jazzwealth.com. By the way, this is all financial educational advice. This is not investment advice. You should always consult with a registered financial professional before considering anything you see in this video or any of our other videos, website, or any other publications. Ha! I'm getting pretty fast at that. So basically, if you're a retirement investor and you've got more than 10 years to go, a lot of our clients do, we all have the best of both worlds right now. If the markets keep going higher, okay, no problem. That's a good thing, right? Nobody's complaining. But we all sort of see that the markets are extended and maybe even ready for a pullback. I'm not saying they will, but if you're a longer term investor, you actually welcome that. So for the first time in a long time, you're happy with either one. If the markets continue higher, well, that's good. Nothing bad to say about that. But if the markets pull back, now that's an opportunity, right? Now we don't have to be fearful. And I hope you've seen some of our videos on YouTube kind of explaining why if you're invested right, then the market falling is a great thing, provided you have enough time until retirement, which I hope you do. I hope you have plenty of time to go still. But regardless of that, let's take a look at the markets today. Let's see what happened. Your leader in the S&P, I believe, even though it did pull back towards the end of the day, the leader in the S&P, First Energy is the name of the company. It's an energy company, obviously. They say it in their name, do good stuff there. They got $2.5 billion in equity. They were looking for this equity. It didn't come quite as easily, I think, as they hoped, but they were looking for it. They got the $2.5 billion. They're going to add to their pension program. So if you work for them, that's a good thing. Probably not going to add a lot, but they're going to add some. They're looking to reduce debt and they're looking to grow. They want to fund these further investments. They claim that by getting this money, they're good to go till 2020. They shouldn't need to raise any more money. And basically the stock was up about 10% on the day because of it. You've never heard of that company though. So let's talk about one that you've heard. Wynn Resorts. You ever been to the Wynn Casino in Vegas? I've never actually been, but I would love to go. Wynn Resorts soars to new highs today, almost 9% on the day. Here's the thing, Macau. If you follow Wynn, Las Vegas Sands, MGM, all these guys, Macau was a big deal. That was a really, really tough patch for them. That goes back a few years. I'll be honest, I haven't followed that in a while. But basically, Wynn came out with their earnings and revenue that beat expectations across the board. And the most important thing was Macau. Their two properties, their casinos in Macau, were awesome. They did great. So everything was above expectations there, whereas that was seen as possibly a problem a few years ago. So it seems like everybody's gambling over there. Look, Las Vegas, that actually fell a little bit. There's not a lot of people, I guess, gambling as much in Las Vegas. Their sales fell only 1.6%. Nobody really cared. They liked the news from Macau. That also took higher the other names. MGM, did you know that was a public company? That was higher by 2%. Nothing special there, just following on Wynn's coattails. And Las Vegas Sands, the assumption there is if Wynn's doing well, they all must be doing well and kind of have that bad news behind them. So looking good there. Really nothing bad to say in the casino space. I'll tell you what does look bad, though, is General Electric. These poor guys, man. Such a cool company. They seem to want to do a lot of different things. They got a horrible, horrible downgrade today. Stock fell to new lows once again. You know, we talk about analysts upgrading and downgrade stocks. Occasionally, an analyst feels like he's going to put his emotion in there. He says a few extra things just to really jab at him. I don't know if he's got a losing position or what. But basically, Bank of America downgraded the company to neutral from buy, so they're not recommending it anymore. And then the analyst went a little far here. He goes, we're downgrading the company because of lower earnings estimates. Okay, we all kind of expect that. And then he says, also because of zero equity value on GE Capital, worthless, and a lower value on all the other GE companies that they have. He also felt like with this breakup process that they're considering by the spring, that the market will, quote, The market will not pay up for the company or anything that the company decides to do. So he's basically saying, forget it. You guys are done. You're toast. He said everything but short of saying that. Look, the stock, if you can even see it, you can't even see it on the charts. My little screen thingy doesn't go all the way down that low. In the last 7 trading days, the stock has lost 15%. Is that an opportunity? Do you take a shot on something here? Maybe they break up and you end up with some portion of all these different companies. What do you think? Leave me a note in the comments below. Do you see this drop in GE as an opportunity, or are you running for the hills? You want nothing to do with it? I know there's some counter trend players out there. You guys let me know what you think. Lastly, I want to leave a note for you with what Goldman Sachs said here. Let's see what their stock did today. I didn't follow it. Up 2%, breaking out to new highs. Okay, so financials very strong today. But the point is, Goldman Sachs, they put out notes to their clients. And the more money you have, the more sort of better the notes are, their assumptions, their trading recommendations. Well, this note went out to clients that have at least $10 million. And it's not me, so don't ask me how I got it, but it's not me. So the note said to their clients, despite everyone saying the market's in a bubble, the bull market will continue. This is their words, not mine. They recommended that clients stay invested in equities despite high valuations, despite everything being overpriced. They even said that everything is currently in the 10th decile. Is that how you say it? 10th decile of its expense, right? So 90% of the time, stocks are cheaper than where they're at right now. Going back to the Great Depression, that's essentially what they're saying. They actually said it. I didn't say it. So they said, despite these high valuations, stocks being cheaper 90% of the time, but you're paying higher now, they recommended that you stick with equities. Now they protected themselves here a little bit by putting in this. This recommendation comes with a note of caution. We have to remain vigilant, brace ourselves for continued cyber attacks and terrorism, and acknowledge that growing geopolitical tensions could result in an ugly and costly war. So they said all these great things, stay invested, keep your money with us at Goldman Sachs, everything is going well. And then they said, well, you know, but look, things happen. The markets could fall. So basically they protected themselves. Here's the thing. Everyone is confident in the market going higher. Are you confident that the markets are going higher? Leave me a comment below. Let me know what you think about this market. The all news is good news market, and any bad news is shaken off in 5 minutes. I mean, just like that. Any drop in the market, it goes right back up. I think it's an opportunity for the longer term investor. If you're a client of us at Jazz Wealth, great. If you're considering somewhere, hopefully you'll check us out at jazzwealth.com. Shameless plug. But this is an opportunity. If the markets fall, great, you're buying at a discount. You've got plenty of time till retirement. If the markets continue higher, that's pretty exciting too. Nobody's complaining about that. So in the meantime, everything looks great. The markets continue higher. If you want, we'll take a look through the S&P. We'll use the futures today. S&P, all new highs. Look at that chart, screaming higher. Nasdaq, screaming higher, perfect uptrend. The Dow, perfect uptrend, everything looking good. And here's the Russell. This is the new Russell futures, so it's not as pretty of a chart yet. We can look at the ETF, I guess. Could we? We can look at the ETF. There it is. So the Russell 2000 also looking good as well. Not followed as much, though. Incredible. Incredible, incredible. So I'll leave you there with that. I hope you enjoy these videos here. If you do, be sure to check out some of these other videos you might be seeing on the screen. Our website, jazzwealth.com. If you have retirement accounts, you just don't want to manage them, you want some help, you want a guy that's watching every day, I'm here for you, and I'll help you with all your personal finances as well. I hope to talk to you soon.